Welcome to Fed Week. On Wednesday, the Federal Reserve will make its final interest rate decision of the year, and markets are pricing in an 86% chance of a rate cut. But if they don't cut, stocks will sell off hard. If they do, all eyes will immediately shift to something even more important. With Fed quantitative tightening ending on December 1st and Powell stepping down in May of 2026, this meeting will give the clearest signal yet of what the next bull cycle will look like. Today, we're breaking down what the Fed might do, what happened last time, and where the action is at right now.
This is the week that everybody has been waiting for. The Federal Reserve is set to cut interest rates this week on Wednesday at 2 p.m. Eastern Time. We can see right here, right off the bat, 2 p.m. Eastern Time will be the Federal Reserve's interest rate decision. After that, Jerome Powell will speak at the FOMC press conference at 2:30 p.m. Eastern Time. We can see right here that the market, as of right now, is pricing in an 86.2% chance of a rate cut at the last FOMC meeting of 2025. Will this end up being the meeting that really kicks off the bull rally, or will it be the meeting that ends up bringing in some selling pressure? Personally, I lean more towards the bull side, but Mike, going back and looking at the past couple FOMC meetings, we can see on the September 17th FOMC interest rate decision to cut rates, we saw the market jump for a couple weeks and then continue to the upside as the month progressed. If we go back into the very last meeting, October 29th, Jerome Powell came out with a lot of uncertainty. He said that the December FOMC meeting would be up in the air on rate cuts. The Federal Reserve is very conflicted right now, and they do not necessarily have a true view on if they wanted to cut rates or not. And that ended up tanking the markets there. That is one big concern about the FOMC interest rate decision coming out this week. Of course, this week on Wednesday will be a very big day for the stock market. If the Federal Reserve cuts rates and indicates that more rate cuts will be coming in the future, then I think that is exactly what the bulls are looking for.
Exactly, because basically everyone's already pricing in an interest rate cut, so it's most likely going to happen. And what, like you said, everyone wants to know is if we are going to see more rate cuts into 2026. Right now, there's only around like a 24% chance of a rate cut at the next Fed meeting on January 28th of 2026, which, is a little bit interesting, we can say. And this meeting this week will be especially important because we're going to get an updated version of the Fed dot plot, which specifically outlines how rate setters envision the coming year and beyond unfolding for the U.S. economy. Quantitative tightening just ended on December 1st, and Powell's going to be out pretty soon on May 15th of 2026. But once Trump announces his Fed chair, that's going to act as like the shadow Fed chair, basically kind of like a pseudo version of Jerome Powell.
As we go forward, we're getting into that environment where there could be more rate cuts on the horizon, especially with the Trump-appointed Fed chair. Now, of course, Trump did appoint Jerome Powell, and we all know how that's been going the past few months. But nonetheless, there is a pretty good chance being priced in of rate cuts in the future. And I think that whenever we see this meeting this week, this is really what we're going to be looking at. What's going to happen at the January 28th, 2026 FOMC meeting? Are we going to kick off 2026 with another cut, or are they going to go towards pause? I really think that that's what everybody is looking at this week. Of course, if they talk about a lot of uncertainty, be ready. There could be potential selling pressure. The jobs market has been weakening, and there has been some economic factors that do point to some negativity in the short term.
So, Tom, the market is 0.54% away from its all-time high. We're very close to retesting and potentially even breaking past it. When we look at the charts right now, what are you seeing and what is on the radar heading into this week?
So the all-time high is right at 689.70. We're really close, especially if we count the high of day from Friday, which hit around 688.37 to 688.40. That is very close to the all-time high. We could be there in just a couple of trading days if this continues. Last week, we saw a ton of chop with the S&P 500. I really think that the market was bracing for impact this week with the FOMC meeting. is scheduled to release. Of course, on Friday, we did get that pop to the upside, which was nice early on, but the market did consolidate as the day went on. Watch that all-time high, 689.70. Everybody's going to have their eye on that. If we end up breaking out above the high of day from Friday, that will be right in play, and we might even make a new all-time high coming early this week if there is some optimism heading into the FOMC meeting about rate cuts. But if we do see, let's just say the SPY pull back ahead of this meeting, there could be a pullback back down into the chop zone. This is a big chop zone from essentially 679.50 all the way up to 684. This was a very critical zone where the SPY held last week. If we get back in there, expect a lot of chop, watch those areas as supports, but I think everybody is really wondering what's going to happen with that FOMC meeting this week, and will we break out? So what I'm worried about this week, Mike, especially for the next couple trading days, is that the SPY stays slow. It stays choppy. Be ready for that to happen because everybody's really waiting to see what happens on Wednesday.
What is exciting about FOMC weeks, though, is that we do tend to see pretty big moves. Just like you pointed out with the two most recent FOMC events, there tend to be strong moves, so, there should be good trading opportunities. One thing that works to the bulls' favor is that we are in a historically strong period of the year. Not only did we have one of the best Thanksgiving rallies that we've seen in a long time, and not only does that tend to continue to bring on even more bullishness, but we're heading into like the middle to late part of December, which tends to get stronger and stronger. These next couple of trading days tend to be like a little bit choppy, but after that, it is historically a very strong time of the year.
Yeah, we had one of the best Thanksgiving weeks in a long time, and it was a historic week. The market went green every single day of the week there. And as we look at it, so far, December's been a little choppy, right? As we went into last week, there was a lot of chop, but ultimately we are a little bit higher from where we opened at the beginning of December. So that's a good sign. So far, we are seeing some bullish price action. And looking at this chart here, that definitely does support, let's say, a good Santa rally coming in to help boost this overall bull run happening at the end of the year. But Mike, whenever we talk about the big bull run that's been happening lately, we've been going through a pretty crazy earnings season as well. We've seen a lot of good earnings, a lot of bad earnings. This week, we do have a couple big stocks reporting. Oracle on Wednesday and after hours is huge, and AVGO and Lulu and Costco will be huge Thursday as well. I personally am really looking at Costco to see how consumers are spending and how they report things, but I know a lot of traders are looking at those big tech stocks as well.
Definitely. Yeah, of course, Oracle is one that's definitely close on watch. This has been one of the hottest stocks in the second half of 2025, and they fell quite a bit from recent highs of around $345 a share, all the way down to like $185 a share for like a loss of like 45% just over the past couple of months. So that will definitely be an exciting earnings report to keep on watch, but we even have some economic events as well. Of course, the FOMC event is like the star of the show this week, but we also have JOLTS jobs data set to release 30 minutes after open on Tuesday.
Yeah, that is going to be huge. The Federal Reserve has been looking at jobs data very closely. We have been seeing the jobs market weaken, and if this does support that, that could push the Federal Reserve closer towards rate cuts. And Mike, like whenever we talk about the economic data and just the economy in general, we've been seeing a lot of concerning factors hitting over the past few weeks. We've talked about it a lot here on the channel, but looking at this data here, bankruptcies are surging among small businesses. Yes, a record 2,221 small firms have filed for bankruptcy up to under Subchapter 5 year to date. Subchapter 5 is a little bit different than Chapter 11. It allows businesses and individuals with under $3 million in debt to reorganize more quickly and cheaply than the traditional Chapter 11 that I mentioned earlier. But bankruptcies have risen 83% over the last 5 years, and of course, this has been driven by a lot of things in the economy. One of the biggest things is high borrowing costs, of course, cautious consumer spending, and overall economic uncertainty, which has weighed on small businesses in general. So as we look at it, bankruptcies are surging, and this is pretty concerning, I would say, that we're already above 2024's numbers.
Exactly, and it's not just U.S. small businesses, it's also U.S. large companies as well. 717 large companies have gone bankrupt year to date, which is the most in 15 years. This is higher than every full year since 2010, and it's also the third consecutive annual increase, and it is a 93% jump since 2022. In only November, 62 large firms filed for bankruptcy after 68 and 66 in October and September. So bankruptcies are running hot right now.
They really are, and whenever we see this data, it's very concerning. And then we have even more data that helps support this theory as well whenever we look at medium and heavy truck sales. So keep in mind, these are specifically medium and heavy trucks, but whenever we look at this, a lot of those are used commercially, right? There's obviously been a problem with demand for freight, construction, industrial activity has significantly weakened as well. So this is really hitting, I would say, the market in a pretty weird way. And one of the weirdest things that we can see here is that whenever we get these big drops with the medium and heavy truck sales, it's associated to recessions. And this begs the question, are we heading into a recession? They might not classify it as one, but traders might feel it.
Yeah, I mean, basically every time we've seen a meaningful drop in medium and heavy truck sales, a recession has shortly followed, and we have been seeing a pretty meaningful drop. So we shall see. Either way, it's very interesting, and this is something we will continue to monitor. But looking for tomorrow, let's jump right into the fun stuff, which are some setups and predictions. A stock that is definitely on my radar is Netflix. Basically, they had some recent news where they agreed to buy Warner Bros. Discovery in a deal valuing that business at $82.7 billion. Basically, Netflix stock has been selling off a decent amount over the past few weeks, and it has also been selling from this news as well. When we look at Netflix, it fell by around 3% on Friday, and it was really all over the place, but mostly weak. If we continue to see a breakdown past that $98.50 area, Netflix will definitely be on my bearish radar throughout the rest of the week. When you have deals like this, it is pretty common to see the company that is acquiring the other company, so in this case Netflix, to drop.
Yeah, 100%. We see that happen quite often, right? I mean, they have to obviously pay for the deal. They might add to their debt. Things like that can definitely negatively impact it. But whenever I look at this, it's definitely interesting with Netflix down 2.89%. And Mike, it's weird to say that Netflix is at $100, right? They recently just had a 10-for-1 stock split where their stock price was much higher. So it's definitely strange to be looking at them at these levels. But whenever I look at it, it is negative for them in the shorter term. And that was a pretty weird move on Friday as well. But with my first play, I'm actually looking at British Petroleum to the downside. I saw that BP started really pulling back last week, and we can see that BP has recently ran up and double topped very close to $37. So I'm really watching for this double top to continue to materialize. And something that I really liked is that on Friday, we got that good turnover starting to happen. So we could see a continuation for a few trading days here. And that's really what I'm looking at for tomorrow and for the next few days is, okay, are we going to continue with this downside momentum? That momentum actually was so good that it went all the way into market close. So if we can break that low of day close to 35.80, then watch BP to the downside as oil stocks start to pull back. I did actually go over to crude oil itself and look at it on the daily. It does seem like it's trending up, but nonetheless, BP is pulling back pretty hard.
All right, another stock that is close on watch is Moderna, and it's to the upside. This stock has been basing pretty well off of support right around this $23 to $24 range, and it's starting to increase its momentum as well, as it was up by just under 9% on Friday. We are getting closer to retesting some resistance right around this like $28 to like $30 area. There's a lot of resistance overhead, but this stock is definitely basing pretty strong off support. It's seeing a nice increase in momentum, and as we've seen with many times in this stock's history, when it has meaningful momentum, it has the ability to continue for multiple weeks to even multiple months at a time. Another thing that I like is that it technically has a weak correlation to the overall market of minus 0.28, so it doesn't really move that much with the overall market, and if anything, it has the ability to benefit maybe a little bit if the market itself does weaken.
Yeah, and we're starting to see a lot of people flock into the healthcare stocks in the short term. Moderna's been basing very well, starting to rise again. Pfizer's been starting to pop off. Shout out to the big money trader there with Pfizer. I've been loving that one in the shorter term. But nonetheless, looking at Moderna, that is a very advantageous move Friday, up 8.6%. So I will keep it on the radar. With my next stock, I'm looking at Palantir to the upside as well. I love the way Palantir closed Friday up around its high of the day, and there is a clear resistance around this 182 to 182.15 range range. Whenever we go and we zoom in on the X-ray vision and the Bookmap, we can see that 182 was a pretty big sell wall Friday. There are some sellers stacked up at 183, not nearly as significant as 182 though, but something that I am concerned about is 185 overhead. So what I'm looking for is a good continuation with Palantir back above its high of day, breaking back through 182, and then of course watch for 185. That's going to be a big sell wall. It could be a good target and maybe a good place to start to take profits if it does start to pop off early on this week. Either way, Palantir had a great move Friday. We've been seeing a little bit of positivity with a lot of these stocks recovering back up. It's been helping to fuel the SPY, and Palantir has been on a pretty good rip here, Mike. I will say, though, Palantir is pretty overvalued whenever we zoom out on a daily chart and we look at fundamentals, but nonetheless, traders are irrational.
All right, well, let's jump right into today's momentum plays then. And with the first one, we have Snap, ticker symbol SNAP, to the upside.
That was a good move by Snapchat Friday. If it can break above $8 even, which is a very nice whole dollar level, watch it to the upside.
All right, with the next one, we have Serve Robotics, ticker symbol SERV, also to the upside. And this one had a crazy week last week.
It really did. The high of day on Friday was close to 1380, so if it can break past that, watch it up. But yeah, robotics stocks were on fire last week after it was announced that Trump could sign an executive order in 2026 for robotics. He's helped boost a lot of different industries like AI and etc. over the past couple years, or over the past year, with a lot of these new executive orders. So yeah, watch SERV above 1380.
All right, and then with the last one, we have Sunrun, ticker symbol RUN, to the downside.
Yeah, Run had a pretty big downtrend on Friday, down 4.2%. If it breaks under 1735, then watch for it to continue dropping.
All right, so we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. You guys know the drill. Whether you're trading one of these three stocks or anything else, focus on what matters, which is protecting your capital above all else, but also making smart, long-term oriented trading decisions. Know why you're getting into every trade that you get into. Know where you will exit. And as always, have stop losses. Definitely check out the Key Lessons channel in the StockedUp Discord. There's a lot of great free information in there. And besides that, let's jump right into today's $2 million big money trade. And today we are looking at ticker symbol FR. On Friday, the trader here bought the 60 strike call options that expire on March 20th of 2026. The trader here is risking $2 million to make $8 million. This stock is a REIT, so basically it owns real estate in the logistics industry, you can say. It has been uptrending very strongly ever since the Great Financial Crisis and is in the process of resuming that uptrend after a period of consolidation over the past 3 years. It is pressuring recent highs around $58 per share, and it is setting up for a potential breakout, as we can see here on the charts. Logistics real estate continues to benefit from reshoring, and if the Fed continues shifting towards an easing cycle in 2026, that can definitely drive a strong bid in REITs as investors rotate out of bonds. Very interesting setup. I like the risk reward. I like the strike prices selected, and it has like a fair amount of time to it, but nothing that's like crazy where we have to wait 2 years or anything like that.
Yeah, this does have a lot of time, and whenever we look at FR, it is approaching that big resistance that you mentioned. The $59 to $60 range is huge. It does seem like it's going for a possible breakout there, and whenever we zoom out on this stock, whenever it does start to uptrend, it can uptrend for a long time. And if we actually go back to the last breakout that occurred with this one, of course it died during the Great Financial Crisis, right? But once it finally broke out past there, you can see how well it actually uptrended for that next year or so. That was a really good jump all the way up to $40 after breaking 30. So definitely watch this one closely. If we do get a breakout mounting, it can end up resulting in a pretty awesome move.
Either way, let's keep it close on watch. And if you are new to the channel, welcome, and definitely consider obliterating that subscribe button. Every single trading day, we make videos covering everything you need to know and more. It takes us a long time to make these videos. We cover important market stats, upcoming events, upcoming earnings, SPY levels and analysis, big money trades, and so much more. If you subscribe, you'll get our videos recommended to you more often, so definitely consider doing that. But we also want to give a giant shout out to today's member of the day, Z Classy in the Stocked Up Discord. They had some good profits on Friday with some SPY call options. Huge shout out to you and keep up the great work going forward. As we know, we're heading into a very important week. This FOMC interest rate decision will be important not only for like short-term monetary policy, but it will set the stage for the upcoming year. Of course, 2026 is going to be a big one, especially with Jerome Powell set to leave his post at the Fed chair. We should be in for a very exciting week. Thank you all so much for watching, and let's crush it in the market tomorrow.